This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and we're getting through the week, right? I'm going to spend a little bit of time today just touching on CPI inflation. Of course, we did that to death yesterday in the live stream, but I do think it's worth recapping what we're experiencing at the moment there. Then I want to talk about some other events that are coming up this week and how the stars, I believe, are aligning to see some relief in the worst case scenario and some new all-time highs in the best case scenario. Then, of course, I want to point out everyone's favorite chart at the moment, which is the M2 money supply. I believe everyone's getting it wrong, so I'm going to show you why I believe that. And then we're going to look at FOMO Finder, a few Bitcoin and other charts, some live positions, TA, all of that kind of thing. And as I often say, expect games, chop and volatility on CPI. But now we are through CPI as of yesterday. Now it's Thursday. Now it is time to really start to look for the market to reveal the true direction it wants to move in. And as always, we will use the weekly close on the Friday to confirm whether or not we've got a true bottom or some much more serious downside scenarios having to be put on the table. For now, I remain cautiously optimistic and hopefully at the end of this video, you will too. So I still maintain that the turn is coming. I still believe that these cycles are bottoming. In fact, I know the cycles are bottoming, and all we really need to see is a few of these macroeconomic events and data sets ticked off this week, which we're going to do by Friday. And then I think it is time to actually see some reliable, tradable bottoms come into the market, at least in the short term. As of yesterday, of course, we got slightly colder CPI data. No surprise really to the Camel Crew. I do want to open Trueflation here and just illustrate a point, right? Headline for last month, we are reporting, according to the government, 2.8%. So when we pull up the Trueflation data, you can see we're kind of in this neighborhood, right? We're reporting at the moment around 2.8%, something like this, which means none of this stuff right here at the hard right edge is yet to show up in the official government reported rate. But of course, Trueflation uses real-time data, and the government is always about a month behind the curve. It only seems reasonable for me to expect in the next month's print to be reporting this kind of neighborhood, and in the month thereafter to be reporting this kind of neighborhood. And that is how I believe we start to get emergency rate cuts put back on the table. That's how I start to think that we see significant repricings. March's rate cut probability hasn't changed yet, which to be honest, I'm quite surprised about. And going out to May, we've had a marginal repricing in favor of more rate cuts. But I suggest to you that as the chickens come home to roost, we will start to see these bigger drop-offs in the CPI, and thus we will start to put rate cuts back on the table. I do think the limiting factor at the moment is actually the 10-year yield, because we know inflation is coming off. We know we've got a strong disinflationary trend. We know the labour market deterioration is present and likely getting worse, but yet the bond market in aggregate does not want to, at least for now, really start to shove the yields to the downside. Now, if my yellow squiggle can play out, I think by the time we get to where my cursor is here, in a month or two's time, the bond market will be demanding emergency 50 basis point cuts. But I believe this is the one limiting factor at the moment. We just need to see this chart of truth, aka the 10-year yield, move to the downside. And then, of course, we should start to truly reprice all of this, which makes sense because we know the Fed is behind the inflation curve, and we know the other key component that the Fed uses is the labour market. And of course, the labour market is nowhere near as strong as they want us to believe. Wholly speaking, things are moving in the right direction for the Camel Crew at least, and we can say happy days for Tuesday and Wednesday's data, right? The jolts came out and were, I would say, market positive. They were not reported in that recessionary type territory, so happy days for now. The CPI data we can also tick off. Okay, we expected colder prints, and that's what we've got. And today, we're going to get PPI, which hopefully can also be cold and confirm indeed that we've still got a disinflationary trend. And if the jobless claims can come out and not be hyper recessionary, then again, I submit to you the path of least resistance here for markets is higher. Consumer sentiment, I don't really think carries much weight. Personally, I don't put much weight on it, so I'm not too concerned about Friday. I really just want to see the PPI come in colder and confirm the CPI print that we saw yesterday, and those jobless claims come in not absolutely terrible, right? Anything other than, oh my goodness, what happened to the labour market? And I think we'll be just fine. The next thing I wanted to spend a little bit of time on is this M2 chart. This has become the internet's favorite fractal at the moment, right? Every once in a while, the internet latches onto something like this and it gets reposted and retweeted, and every man and his dog clings to it for dear life as if this is the holy grail, right? This is the piece of the puzzle we were all missing. At a first glance, this chart does look extremely compelling, okay? We can't really argue that. It seems an awful lot to me, and I'm sure to everyone else, okay? That's why this chart is doing the rounds. Like, global M2 in yellow is moving up, and Bitcoin traces it very, very closely. And therefore, it's only reasonable and logical to expect something akin to this from Bitcoin in the coming days and weeks. Now, that is my base case, as you know. We're already long, we already think the cycle low is in, and therefore, we are already expecting this. But I wanted to just point at this M2 chart and suggest from a slightly different perspective that most people are wrong about this, okay? Now, I think nobody did this better than Tony the Bull. Shout out Tony here. Because all the way back in December, he posted this quick thread, 3 or 4 charts, and he shows that the market is cherry picking this data, okay? At first glance, again, this looks extremely compelling. We've got Bitcoin in yellow and we've got M2 Global Liquidity Index in black. It looks like the two things are one-to-one correlated almost. It looks like you can use one to predict the other. But as Tony points out here, when you zoom out just since the FTX collapse and the most recent major low, we can see the correlation has only been one-to-one looking recently. And if Bitcoin tracked this metric one-to-one all along, then it should have seen Bitcoin at 70k mid-2023 instead of it trading in the high 20ks. And so again, it's easy to cherry pick a small portion of this and say, oh my goodness, look at this, one-to-one correlated. But when we zoom out, okay, what about all of that? Pretty much useless, if I do say so myself. And as Tony points out again, keep zooming out here and the correlation all but disappears. Bitcoin might get a boost from M2 rising, but it isn't one-to-one correlated like the charts going around X suggest. In fact, when Bitcoin is most bullish, it appears to get completely disconnected from M2. And even more interesting yet, when we layer it this way, it seems that M2 actually acts as support for the last 3 major bottoms in Bitcoin. Here, here, and here. And in this final example, we can see that in late 2017, Bitcoin topped out and M2 kept rising, even skyrocketing in 2018 while crypto was in a bear market. Okay, take a look at this. Bitcoin tops out right here, enters a bear market. What does M2 do? This. Okay, global lick increasing the whole time. And this is the exact same bone I've had to pick with this chart right here. We've probably all seen this chart, and people love to say liquidity's rising. The liquidity cycle's up, so we're going up only forever, at least until the liquidity cycle peaks. But notice how in the GFC, right in here, okay, liquidity was rising the entire time. So if it was as easy as liquidity up by everything, then I think we would all be rich. What I keep seeing with the internet's favorite fractal at the moment, this one right here, I believe to be somewhat misleading, in fact, extremely misleading. I believe it to be cherry picked, and I believe it to not actually be very useful at all. However, with that said, I do think it probably is going to end up being right for the wrong reasons. I do believe the cycle lows bottom in, and I do believe the path of least resistance is higher here, but I also believe a bunch of people are going to be using this to explain away the upside price action, and as I've shown you so far, it doesn't really seem like that's realistically what's going on at all. For one final bit of alpha, BOGMBASE is actually extremely useful and much more useful in calling tops in Bitcoin than the M2 is. We get a bottom in the BOGMBASE in July of 2020, which is right before Bitcoin goes on this parabolic advance to new all-time highs, okay? Also note the month when Bitcoin tops here, November of 2021. When we go back to BOGMBASE, here's November of 2021, the peak comes in December of 2021, and then we get the decline into the bear market. Also notice where this thing bottoms. October of 2022 makes one final low into February of 2023, and then starts to move up, which of course is where we saw the final lows come in for Bitcoin. And then by the time we get to Bitcoin starting to truly trend up here, we're in that February 2023 timeframe. Also note, okay, the first major top for Bitcoin comes when? It comes right here, March of 2024, after we make the bear market lows. Where does the top come in? Okay, February and March of 2024, and this thing does not bottom until about October of 2024. What happens in October of 2024? Okay, that is September and October. As the total monetary base bottoms, we then get the push to the upside. So I suggest to you that this thing is actually way more useful than that silly M2 curve that everyone keeps sharing around. And the last couple of things I want to point out before we move into some charts are we finally have FOMO Finder in panic into that weekly cycle low. Okay, we wanted to see this for a while. When we scroll down and look at the hard right edge, there you go. Okay, finally, we've got our purple into those cycle lows. This, to me, says we are getting extremely close to a turn now. Any moment now, we should see one big green candle. And that, for me, is all I will need to see to be sure that we have a daily and a weekly cycle low confirmed. I think by the time we get to 92k, I will be extremely confident that the low is in. And if we come back here, hanging around break even, a little bit below at the moment. Stop loss still holding for now. And again, we only really need to see about 92k for Camel to be extremely confident we are going to the moon and beyond. So let's see if we can get it. I know a lot of people don't want to believe it really, but that's frankly good. I don't want a bunch of people to think that the next obvious move here is a snap to 150k plus. Gold and silver still playing ball, confirmed daily cycle for gold, and the silver positions we're stacking on top of each other, looking pretty happy. Got some minor exposure too there. Happy days for the metals. And the stocks yesterday posted a candidate for a swing low, okay? So all we need now is a bit more follow through and confirmation via a trendline break, and we should be able to see the markets resolve into relief and move to the upside. The exact same thing is true of the Nasdaq, right? We have got, for the first time, a candidate for a swing low. Not confirmed yet, but soon will, in my opinion. And then, again, we've got a nice trade set up out of here, looking to see if we can get hold of some relief. And so as ever, expect a little bit more chopping games and volatility, but look for the true direction to be revealed today and confirmed into Friday's weekly close. Other than that, things seem to be going according to plan. Everything seems to be aligning nicely, and I do believe there'll be some tradable lows show up today or even tomorrow. So stay tuned for that. I'm your boy Camel. I hope you're having a great week. Until next time, take care. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key, taking a stormy